Am I actually filming? Yeah. Hello everyone. Welcome back to the channel. And today we actually made profit again. It was $400 in a 100 point move. It was a nice trading day, but this one was actually interesting. Why? Because there is some things that I want to talk about, and when I pretty much just talk about stuff out loud, it's kind of easier to remember what I want to do or to follow the line of thought. So, in this day, as I said, it was an interesting day. Why? Because we had CPI before market open at 6:30 in the morning. I mean, I don't know, in your country maybe at 8:30. For me, it is 6:30 a.m. And yeah, we had CPI. And the reason why that's interesting, because you may say, David, CPI is not interesting at all. Why would we care about CPI? And I'm saying this not because CPI is interesting by any means. I mean, it is, but what I want to say is that the opening range that we had today made me think about, and actually I'm going to do a little bit of research about the opening range correlation. I mean, the correlation between a CPI driven opening range and day types. Because if you see on the screen, this opening range was just like 131 points. If you go to, for example, the previous session, the opening range was 185, 180. Yeah, this is the right one, or yeah, yeah, 130 points. If you go to the last session, where is it? I think it is this one here. It was 138, and this current session was 140. Yeah, it is kind of average, but in yeah, I mean, in these recent days, we had some crazy news. For example, this was a Trump tweet that pretty much messed everything going on that day. And this day was after driven news. I mean, we have an intra-week gap in the price, so that also means global catalyst um, conditions more than actually price discovery being discovered, well, normal. For example, let's see this day. This day was, yeah, you see, because from what we have been seeing in the last month, a open range from 180 could be considered and below narrow, and anything like 200 and 300 could be considered wide open range. So when I look at this and I see like 120, 130 points, it's like, huh, that's interesting. Because if we have a narrow open range, I mean, narrow in the perspective of what we have been seeing in the past couple months. Because as you see in the last two sessions, we actually had kind of open opening ranges with a similar value, and that made me think because this was kind of new driven. This was also two, and this one was also two. That made me think about how does a high impact new can affect the correlation between opening range and day type. Why? Because these 3 days that, again, in the macro perspective, could be considered narrow opening ranges, they were actually, they behaved like if they were wide opening ranges. That's what made me think that it might be interesting to do a little bit of research on that, maybe do a little bit of back testing too, especially with CPI, because CPI it's kind of one of the most important news that happened before the market opened. So I'm going to start investigating that, and if I find some correlation that maybe, I don't know, in CPI, maybe perhaps price discovery is done at CPI, not at the opening range, and you don't want to have another volatility regime doing a price discovery. Maybe you just want to follow whatever the CPI did and trade based on the CPI. Because, for example, here, if we actually take the CPI as the opening range, we had pretty normal day. I mean, the day types, not bad. It was normal by any means. And if you see here, like the opening range, we had a neutral day. I mean, the point here is that they both would be consolidated, and I want to see if there is maybe a pattern there, maybe a pattern here. Do a little bit of research in how, yeah, CPI can affect the correlation of the opening range and the types. And yeah, I mean, let's go to the trade because yeah, that was interesting, and that might have a little bit of that might be worth researching. And let me go here to the replay mode so you can you guys can see like what was the logic behind the trade that I took in real time. No need to, I mean, it's obviously hindsight, but you can at least see like what was the logic on here. I mean, I'm stupid. I'm doing the 15-minute, bro. I mean, that might make me look a little bit bad because, for example, yeah, this was 200 points. Forget all that I said about the opening range of the last days. I was actually on the 15 minute. That's pretty weird. I never used the 15 minute, but I just noticed this one was 170. Remember, this was also kind of news driven, and this one still was 130. So as you can see, we do have a narrow opening range. The last session was 200 points, so my point stands. My point being that on the last couple of months, anything 200 and above might be considered a wide opening range. And as you can see here, we actually have a small opening range. And that's funny because some people might see the small opening range and they might think, why did you trade it as if it was wide? And that's exactly the question that I want to answer, and I want to actually do a little bit of research because from what I have seen, and this is not statistically proven, this is just my experience. From what I have seen, it is that CPI pretty much deletes, or not deletes, but does the price discovery instead of the opening range. So you might see some wide opening ranges, you might see a lot of narrow opening ranges, and you might say, okay, narrow opening range, the possibilities are either trend, double distribution, or non-trendy, right? No, because I mean, this is from what I'm guessing, I haven't done proper research on this, is that the the price discovery is actually being done by the CPI instead of the opening range, but I'm going to research more about it before saying anything really. And yeah, let's go just straight up to the trade. As you can see, it was also kind of a quiet opening range. That what also makes me think that CPI may be related to this because the opening range was kind of quiet. Look at this, we're on zero delta. So price discovery may have happened in the CPI, but who knows? I'm not I haven't done any research on that, so let's leave it at a maybe possibility. And for example, here we had a previous consolidation that in case that the price wants to drop, maybe we can visit this and do it as a little of an open test ride, but this is not going to be an open test ride because the opening is being really quiet. We're not building a lot of selling momentum here. If you see on the delta, we're pretty much at zero, and we're already two periods in. We're on the second period, and we're at zero. So this is not an opening test, but it may behave like an opening test in the sense of testing a reference point and then turning back. So on the cash session viewer that I have here, as you can see, we pretty much opened outside of value but within range. So that means that probably we will overlap the previous day value to the upside, maybe with a P shape or maybe with a D shape. That doesn't matter. What matters is that since we have a point of control above the previous one, we are bullish. And let's just skip a little bit because the trade was kind of simple and really fast. In 5 minutes, I was already in profit. And yeah, as you can see, I just pretty much marked this consolidation. Why? Because it is the high volume node, pretty much. As you can see, it is a high volume node. You may argue that this is a valley, might worth noticing. So this can be either rejection or path of least resistance. It can be either of both. And it's also under the consolidation, so that makes it better. And let's just skip this a little bit. And as you can see, price actually started to auction lower. Let me go to the range charts. And if it loads, yeah, there it is. And put on the big trades. Yeah, as you can see, price started to auction a little bit lower. We touched, this is the point of control of the consolidation. Let me put it on blue so you can see it. We pretty much tested it. We tried to auction lower, auction failure, right here, auction failure. And also on the 30 minute, as you can see, we're starting to create a little bit of excess on the downside. Why? Because, I mean, look at that tail. I mean, the candle has not closed, but I mean, 70, 80 points of a tail. That's a pretty good sign of excess. And remember, on excess, um, excess means that price it is just auctioning lower to attract responsive buying, and therefore might be able to create initiative buying to the upside. That can also happen on the downside. You can create excess both ways. You can even argue like the CPI candle is excess. Look at that, 140 points of excess. Trying to grab responsive sellers and maybe initiate a responsive buying, well, initiative selling, sorry, to the downside. I mean, look at that, 120 tail, 120 points we're doing a tail of 120 points. That's actually crazy. So yeah, pretty good sign of excess. I mean, and look at that. We reached the low of the period at 8:16, and at 8:22 we're already 100 points above. So we're rejecting this, and we are rejecting it fast. So that's pretty much the signal that you need. Well, not that you need, but that I had in this case to go long. Also, that if you notice what's happening right here, when we are breaking like this, you can call it structure, this consolidation right here, when we're squeezing, you can see some kind of acceleration. I mean, yeah, you here have initiative selling, might be also responsive selling from people that actually want to go lower, auction lower, but that's not always the case. You need discretion to know how to differentiate initiative and responsive buying or selling. And my entry was in like 5 minutes. Let's just speed this up a little bit and I'll show you guys my logic. At this point I could have entered, but the thing that I didn't like it was the risk to reward. Because I mainly like to protect myself outside of structure, I like to at least keep it like a 1-to-1, if I can a 1-to-2, but that it makes sense. So I didn't enter on these highs because I was expecting price to auction a little bit lower so that I could enter with a better risk to reward. And let's just skip right back to my entry. As you can see here, I mean, yeah, the speed was sped up, but if you notice this, like we made 4 candles in 2 seconds on the range charts. That means acceleration. When we're trying to auction to the upside, we're seeing that buyers are accelerating. Yes, we have here responsive sellers, but that means if we manage to go up and squeeze this this high, the price will accelerate to the upside. And my entry, you guys, was like right here because I entered at 8:29 in the morning. Yeah, I pretty much entered just like right here. As you can see, we tried to auction lower. We're seeing also acceleration. And this is when I said, you know what? Oh my God, that sound annoys me so much on the platform. I may change it. But as you can see, sorry, we auction lower. We failed the auction and we are now starting to go up. I pretty much aim to the point of control. You may argue that you could have held, that I could have held to the opening range high, and that's true, but on the model that I use and just the way that I trade, I just prefer the most probable take profit. If you aim to the opening range high, yes, it might give you a little bit more of profit, but it is more risk. And in this case, since I'm in a funded account, I want to take the most probable TP instead of the most return. But it would have been also valid, don't get me wrong. It is just how I manage my risk and how I manage just my trades. And let's just keep this a little bit because it was a pretty quick trade. It might be the quickest trade that I've ever taken because if you see in 5 minutes, look at that acceleration. As I told you, if we managed to squeeze, we would have an acceleration, the most probable thing. And as you can see, in 5 minutes, we gained $400 because it was a 100 point move, and I entered with 2 micros. And yeah, pretty much that was everything that I did today. it was a very fast session. I got on at like 8 o'clock, 8:15, and at 8:34 I was already out. So yeah, it was a pretty quick session today, and interesting because I mean I don't know if this helps anyone, but actually looking, as I said, for how does the CPI correlate with the opening range might actually be something worth researching for yourself. And yeah, guys, I mean that was pretty much everything that I did today. And so like and subscribe if you liked, and I hope you learned something new today. So thank you for watching, guys.